Hey guys, Brock here with lesson 1. Alright, let's get started. Okay, just to give you guys some resources that I use before we start anywhere. A very good site that I use for definitions, basically anything you want to know about investing, any kind of definitions whatsoever, investopedia.com. Very good resource. I use it. I use it every single day. If I get some new information across. Very good explanations. They have multiple explanations. They give you some good pictures. Good website. The next website I use is stockcharts.com, and I use this very, very often. I use it every single day. It's a free resource, but you can also pay for it if you'd like. I personally just use the free one. You go on there, you set up your charts the way that you want them, and it gives you a really good view. The only problem with stock charts is that to get a clear picture, you're going to get 3-month, 2-month, 1-month views, but you can't get any less than that. If you start looking for 1 week, 1 day, 1 hour charts, you're going to start paying for their service, which I think they charge around $5 a month, somewhere around there. The next website I use is stockfetcher.com. And of course, I'm gonna get in more depth with StockFetcher.com. In fact, in one of my lessons, I'm gonna have just a video on StockFetcher, how to use StockFetcher. But basically, just to give you a brief example, here, StockFetcher is a stock screening source, which basically, once I teach you how to set up your charts and what to look for, you can basically start screening your stocks to exactly what do you want to look for. Basically, it's a filter in which you can set these filters and set the stocks that you want to look for. So, for example, if you want to only look at stocks between $1 and $3, you can set that on there. So, really good tool, and of course, I'm going to get more into depth with that a little bit later on. The next two sites, Google Finance and Yahoo Finance, that's just to look at some quotes, data quotes. They're about 15 to 20 minutes delayed, I believe. The only way to get real-time data quote is if you're signed up with a provider, like E-Trade, TD Ameritrade, which I'm going to get into that a little bit later, what kind of trading platform you'd like to use. So, a little overview of lesson 1 here. We're going to go over moving averages. Very important to find support and resistance lines. We're going to go over the simple moving average, support and resistance, exponential moving average, EMA, and moving average convergence divergence, the MACD sign. After that, like I said, I'm gonna go over some brokerage accounts, and after that, I'm gonna show you how to find some good news. Maybe you're interested in a stock, long term, short term, whatever your trading is. I'm gonna show you some good sites to go for some news. So, first thing, moving average. It's an indicator frequently used in a technical analysis showing the average value of a security's price over a set period. Moving averages are generally used to measure momentum and define areas of possible support and resistance. Okay, before I get into this, what I'm going to do is I'm going to go and set up a chart real quick. And you're going to go to this website right here, stockcharts.com. And once you guys get there, what I want you to type in here is DRYS, DRYS. Go ahead and press enter. And now I'm just going to quickly review how to set up your chart so that, don't worry about all this right now. I'm going to make sense of everything here in a minute. The first thing I want you guys to do is I want you to come right over here. You see it has a symbol. It says update here, where it says inspect. Go ahead and click inspect. You should have that checked right there. Okay, after that, you're just going to scroll on down, all the way down here to where it says chart attributes right here. And where it says range, where it says fill the chart, set that to 3 months. Where it says full quote and price labels, go ahead and click both of those. where it says volume overlay, click that and click separate. Now, the simple moving averages that I'm going to be discussing today is going to be the simple moving average lines, 3 of them. The 50-day, the 200-day, and I want you guys to add one more. It's going to be another simple moving average, except for this one's going to be a 20-day. Okay, now moving on down, indicators, the RSI, that's fine. We're going to learn about that a little bit later. In fact, for now, lesson 1, I want you guys to just go ahead and remove it. I'm going to teach you guys that a little bit later. MACD, and we're going to learn about MACD today, so we might as well just go ahead and set up today. I like to use the numbers 6, 13, and 5. Yeah, I'll discuss a little bit later on why I use 6, 13, and 5, but for now, just go ahead and set that chart up. So after you're done setting it all up, right here on the bottom left, underneath your indicators, click Update. And this is going to give me a 3-month perspective on this particular stock. Now, I preferably use the 3-month perspective. Some people like, if you're a day trader, you're probably more than likely going to use the 1-hour chart or 1-day chart. You're going to be looking for signals in the 1 hour, 1 day range. I'm more of a trader that, I can go in a couple times in a day, but more than likely I like something that I can hold on to over a few days and expect some potential gain. I really like this stock. This is I highly recommend this stock for 2012. They've been doing really well. They've actually came out with some good news recently, as you can see here. Now, the first thing that I want to discuss is these moving average lines. And right here on the left, you have the moving average 50, moving average 200, and moving average 20. So, the green one right here is going to be my 20 line. The blue one is my 50-day, and my red one is my 200. So now that we got this chart set up, and you can sort of see where they're at, I'm going to go to minimize that, and I'm just going to go over simple moving averages because it's exactly what we're using right now. Okay, a simple moving average are calculated by dividing the closing price over a specific amount of days. The most common are 20, 50, and 200-day simple moving averages, which is exactly what we're using here today. Okay, and these things, these simple moving average lines, they're going to determine your support and resistance. And just to go over what exactly support and resistance is, support, the price level in which historically the stock has had difficulty falling below, commonly referred to as the support level. Resistance, the price level at which stocks can trade but not exceed for a certain period of time. And there's another thing that a lot of people don't tell you about. There's this thing called mental resistance. Quarters, half dollars, 75 cents, $1. Those are all mental resistance points. For example, if I'm investing into a stock, let's just say it's 25 cents. And let's just say over the past, since it started as a company, it has never been above 25 cents. And I bought right there at 25 cents. The next mental resistance is going to be right there at 30 cents. And it's going to follow 30, 35, 40, 45, and 50 will be another big mental resistance. But there's really mental resistance. I mean, I'll get more into that a little bit later. But what I really want you guys to concentrate on is these support and resistance lines. So before we get into EMA, let's go back to our chart, and I'm going to teach you a little bit more about these simple moving average lines. So, as I said here, you have your 20-day, your 50-day, and right here you have your 200-day moving average. Now, a very bullish indicator is when a lower moving average number crosses above a higher moving day average. For example, right down here, the 20-day moving average line crossed above the 50-day moving average line, a very bullish symbol. And as you can see, the stock has increased tremendously since then. Another bullish indicator is when a 20 or 50 day, right here as you can see the 20 day is crossing above the 200-day moving average line, showing that the stock is definitely gaining some momentum, and it's getting a lot of buying potential. Now, those are some bullish indicators. Now a bearish indicator would of course be the opposite. If a 20-day moving average line crosses below a 50-day moving average line or below 200-day moving average line, I'd watch out. Of course, we're going to be learning about a few more indicators in which you can use to determine your entry and exit points. But okay, moving on right here. So your 50-day moving average line right here. What this is telling me right here is it has a lot of support at 258. There's a lot of shareholders in this position, and it's really good support. Basically, let's just say the stock started tumbling. 258 would be a very good base support line. Now, another very good support line is 299 and 320. These are all your support lines right here. So if this stock started moving back down, you could potentially play what I like to call a bounce play, in which it'll bounce off. Let's just say, for example, here it bounce off the 20-day moving average line right here at 320. In which, you know, let's just say you bought in at, I don't know, 315. You're getting worried it's going down. It's going down. I would wait for it to hit that support line to see if you can get a bounce. So if the stock somehow hits a downtrend and you're like, hey Brock, what do I do? You know, the stock's been going down. Wait for a support line, and you know, hope for a bounce. Now, if it breaks that support line, depending on where your next support line is, here it's at 299. I personally probably would not wait that long, because if I bought at 315, oh, I'm sorry, this says if I bought at 315, I'm sorry, 330 right here, and it dropped down to 320, which is your support line, and it broke 320, I'd probably have already sold out, because I don't know. I'd look at my other indicators and I'd go from there. But basically, I was saying that wrong a few minutes ago. I was saying 315. I actually meant about 330. 315 is down here. Now let me give you that support. Let me show you some resistance. Okay. Delete that and type in CRIS, Curious, and go ahead and click enter. Okay, earlier I just showed you support. Now I'm going to show you what resistance looks like. You use the same moving average lines. Now for this stock here, as you can see, it's struggling here around about 461. Its next resistance line, which means an area where it's going to have difficulty moving past. You can't really see it here, so you got to look over here. This is your 50-day moving average line. It's at 468. It's only a few pennies above 461 here. So if I'm looking to buy into the stock, I might want to wait until it passes its next resistance line at 468 right here. And then when it surpasses that resistance line actually turns into a support line, in which, you know, the investors have moved past that. Once it surpasses it, it's no longer resistance. The next resistance point will be right here at 461. I'm sorry, 481. And so if I'm holding on to the stock and it's shooting up to 481, I might want to watch out. You know, I'll probably keep my stop loss a little bit tight right there. It's going to hit a lot of resistance. Now, if it surpasses 481, the next resistance will be right here at 565. That is the next highest point that it has not broken. The chances of it hitting that high, though, you know, moving up from 482, it's got to be coming in a lot of good news. In which recently the stock has been doing really well, as you can see these past few months, overall in an upward trend. I just keep my stop loss tight and see what I can do. So So resistance here, 468, 481, and then 565. So a big gap between 481 and 565, but I'd keep a watch on it. Let's look at another stock here. Type in the stock TAT and go ahead and press enter. Okay, this stock overall has been in a lot of places. Let's look back over here, back in late 2011. You see you have your 20-day moving average line, you have your 50-day moving average line, and as you can see, the 20-day moving average line, it started moving down here. As you can see, the stock has been in a downward trend. Then it reversed and it started moving up. Right here to this day, at 121, where this green line is, let's just say right here on December 27th, when it finally surpassed it, it hit a lot of resistance here. And the way I can tell this, as you can see, the next day, the buyers and sellers were a little bit more confused. The stock didn't really move too much, sort of stayed stationary. But then the buyers won overall, and the stock went back on its upward trend. But you can definitely see where it hit some resistance here at 121. Moving on, let's update it today. Let's take a look. This stock, its next resistance point, as you can see, right now it's at 135. Today, it has hit a high of 144. So it's already surpassed 142 and all the other moving average lines. Therefore, this no longer counts as resistance. The next resistance point will be right here at 158. And then after 158, if it surpasses 158, it would be 164. And then to get a higher resistance point after that, you would have to come down here, update your predefined range up to a 6-month period, and look for these peak points right here. That's basically how you find good resistance. Now to find good support, you can of course using moving averages, but also right here at $1.25, very good support. The reason you can tell this is the basically where the stock has done a reversal, where the sellers have moved out and now the buyers are coming in, showing that there's a lot of buying power here. That's why it's driving the stock up. Same with here at $1.18, a lot of good support. So, like I said, guys, you have my email. If you're ever confused about a stock, let's just say you got a stock you want me to look at, and you're saying, hey, I'm having difficulty finding support and resistance, shoot me an email. gulburak@yahoo.com, gulburak@yahoo.com. Shoot me an email, ask me, check it out. Just if you guys are ever confused, I'm here, so don't worry about it. Okay, moving on. The next thing I want to discuss is EMA, exponential moving average. EMA is calculated just like SMA, except the most recent closing prices are weighted with greater strength. So this means that the most recent closing prices are more important and give the investor a quicker signal to buy or sell. Downside is, a quicker signal is not always better and could lead to a big gain or big loss. Now, what I really want to talk about this is, let's just say we're using estimated moving averages, in which you come down here to your overlays and you click right here, exponential moving average. Now, I personally don't use EMA because through my other indicators, I sort of personally determine where I want the stock to be weighed. I can find my support and resistance lines. I know how to do that, and I sort of go off of those. And like I said, EMA puts more concentration and more strength on the ones that are most recent. Well, and like it said, you can't really tell. I mean, why would you? The only reason that you're putting more pressure and more strength on those ones is because they're more recent. I don't believe that's enough of a reason to determine whether or not the stock's going to shoot up or shoot down. So personally, I stay away from exponential moving averages when it comes to just using exponential moving averages. Now, when you use exponential moving average lines together, you come to this thing called a MACD, in which I'm going to get to here in a second. Let's see if there's some more information here on estimated moving averages. Okay, basically estimated moving averages. It's gonna move you on here to moving average convergence divergence lines, the MACD for short. And it's a trend following momentum indicators which shows the relationship between two moving averages of prices. Basically, 3 EMAs and 1 indicator. The most common MACD signal is 12-16-9. The MACD is calculated by subtracting 26-day exponential moving average EMA by the 12-day estimated moving average. The 9-day EMA is a signal line that triggering a buy or sell confirmation. I'm going to make sense of that. Here we go. I personally use MACD 6, 13, and 5, which basically causes my MACD to react quicker to momentum. This is in my personal taste, simply because I tend to trade over minutes or hours. You can set yours however you feel comfortable trading. Now, I do trade minutes and hours, but I also like the setting for days and weeks. Like I said, it is going to give you a quicker reaction, which, like I said before, is not always good. It can lead to false signals. That's why when I come down here, I make sure that it's a clear cross, and along with a clear cross on my MACD, which is going to show an upward trend, I look for these blue bars right here. And these blue bars are basically showing which way the momentum's heading. Now, quick understanding of what MACD really does here. A MACD has a slow moving line and a quick moving line. Basically, when the quick moving line, here it's displayed as the black line, crosses above a slow moving line, the red line, it's going to trigger that the stock is now moving in an upward direction. So right here, as you can see, the fast line, the black one, has crossed above the slow line, therefore confirming an upward trend on this particular stock. And this is Curious. Yeah, I believe this is, it's Curious right here. So right here, this is a definitely confirmed buy position. So right here, you'd buy, you'd ride it up, Now you want to sell before the MACD drops down below. But another confirmed position of selling is when the MACD, the fast line, crosses below the slow line. As you can see here, it was an overall very big selling day. The trick is getting it at the top. Now, an easy way of doing this is by looking at your histogram bars down here. As you can see, the histogram is moving up. It's up. Here it's up again. Here it's down. As you can see, it closed, or it's about level. Therefore, confirming that the upward trend is probably leveling out. As you can see from your volume indicators here, the volume was picking up and then it was dying down slowly here. Therefore, confirming that the buyers are starting to move out of here and that the sellers are probably starting to take in their positions. So definitely a confirmed sell position here for me if you're just going off the MACD alone. MACD and these histogram bars. Now, another stock that I want to show you here is called Rays, R-A-Y-S. And the reason I like the stock is it's a good stock to teach off of. Now, I personally traded the stock back in the day, back a few months back when it was doing actually it was doing pretty well. And when I say well, you can see the stock has overall been going down. But if you have these indicators, you can tell exactly when to enter and exit out of these stocks. So, as you can see here, a big sell day. You're probably looking back into a position to enter into this stock. Now, like I said before, a confirmed buy. As I said before, a confirmed buy is when the fast line, the black one, crosses above the slow line. But in this particular stock, such as Rays, the way you lock in the most potential is you want to get it at the curve, the cup, when it's curving back up. Therefore, it's probably going to curve and it's going to cross over. This is just confirming basically that the sellers have moved out of this stock. The sellers have now exited. This is all buying power. You ride in, let's just say I were to buy right here at $1.08. So real quick, let's just say let's just say I have about $500. So 500 here divided by 1.08. Okay, that's going to give me about 462 shares. So 462 shares times 1.08 my total cost is going to be $498.96. So let's just say, I only have $500 to play with, and I just purchased 462 shares at $1.08. Okay, 462 shares times $1.08. Your entire initial investment is going to be $400, $498.96. So, right here, I bought in. It was a seller's day, but I could look down here at my MACD. I could see there's really no resistance lines until it's way up here. I mean, really nothing holding the stock back. So I buy in right here, 108, and that was on December 19th. Then, coming up, I see my histogram is topping off right here. I really don't want to go any further. I just see that, the MACD is really curling up. Let's just say I want to go and sell out right here at $1.62, and this is on December 27th. So, not a very long hold. Not a very long hold at all. So, going down here at $1.62. $1.62 times your 462 shares that you initially bought. Okay, so 462 shares. I'm going to do it like this. $1.62 initial investment. I'm sorry, $1.62 is your selling point. Times that by 462 shares. That's going to leave you with 748.44. Now, when I come down here to find out how much profit you made, 748.33 minus your initial investment of 498, so 748 minus 498. Okay. That's going to be about $250 in your pocket cash. So, a very good return on investment. A $250 gain off a $498 investment. I mean, you're talking about a 50% on your money in only a matter of a few days. Now, the reason I say this is really important is because, I mean, think about it. Mutual funds, stockbrokers, what do they give you? About 15 or they're advertised at a little 20% yearly. And here I'm showing you how you can pull out 50% on your money on a $500 investment, or I mean anything. You could have only bought 100 shares and pulled out with $200. So I'm sorry, $50. So, and that's only over a few days here. And of course, this is going to grow exponentially. Now, before I get carried away on this, moving back here to MACD. That was one of the curves. You can keep doing this over and over, but I recommend that you have clear signals. This was a very nice signal. As you can see, moving down, the stock actually, I'll tell you a little bit about the stock, Raystream Incorporated. Basically, it's a stock that only came out a few months back here, and they told the people that they could compress files to 1/10 their original size. Revolutionary, if you ask me. I mean, that's great. I mean, everybody's fighting for bandwidth space now. Cell phone companies, internet companies, everybody's fighting for bandwidth. So when Raystream came out, it hit really big. Um, I'll show you guys here a few days back on it, actually. I'll give you a 6-month range, and I'll tell you exactly what I'm talking about. Let's see. This is why you got to pay for stock charts sometimes. The 6-month looks horrible. I can't even really give you guys a clear picture. But basically, as you can see here, the MACD dropped way down right here at $1.02. It rode all the way up to a high of $2.11. A great 100%, I mean over 100% increase on your investment. So, and this is basically what I did. I took really full advantage of the stock. If you were to play off just news alone on this stock, you wouldn't be too happy, because a lot of good news was coming out of that on the stock. A lot of good news, and yet something ended up here at the end. I think around $1.14, some news came out about it, that this company was actually bogus. Basically just a scam company, and in which case, if you're a long-term investor, I'm going to feel sorry for you. But and especially in this volatile market these days, I mean, companies are going out of business left and right. I personally don't recommend a long-term investment in this volatile market, at least not right now. If you're looking for a long-term investment, in which when I mean long-term is over the span of a month, I would look at gold, because as we've seen through history, that when the economy goes down, gold goes up. Of course, you guys see a lot of things in the media about the economy's actually, going up, this, that. Well, possibly, but overall, no signs of economic growth, especially when you keep seeing the increase of gold. And also, we're on the inflated U.S. currency. Most of you guys, I would assume, is using U.S. currency. It's highly inflated, and it's inflated through the Federal Reserve System. The consumer's purchasing power decreases as the printing press increases. So, us having all this artificial cash, the market being very volatile, bad news coming from Greece. Stick with these short-term investments. You're gonna pull out a lot more money. Personally, especially in this volatile market, I believe that it's safer. So, moving on, I've chatted enough about the economy here real quickly. Okay, let's move on here. MACD. If you have any more questions about MACD, just shoot me an email. Okay, just some brokerage accounts real quick. Some brokerage accounts. I personally use TD Ameritrade. They cost $9.99 a trade, so a round trip would cost you about $20. So unless you're making above $20, you really wouldn't want to sell out of stock. I mean, unless it's crashing or something. The reason I like TD Ameritrade is because you can buy as many shares. Why that's important is that I used to use USAA, and the problem with USAA is they charge me $5.95 for 1,000 shares. So I was like, oh, okay, that's nice. But every share above 1,000, they would charge me an additional penny. Now, why that's bad is some of the stocks that I go into, I mean, yeah, they're a few dollars, but some of the stocks I go into are only a few pennies, in which a few $100 can take you a very long way, in which you could afford easily hundreds of thousands of shares. Well, that's not good. I remember I was trying to buy one of these penny stocks. It was only worth a few pennies. I could afford a few 100,000 shares, and USAA was trying to charge me $50 one way, so $100 round trip commission charge, just because I want to enter into a penny stock. Immediately when I saw that, I said no way. I looked around. Another one that I like, but I don't have this, is Scottrade. But I know a lot of guys that use Scottrade. I believe they charge $7.95 or $8.95 a trade. They also let you do unlimited amount of tradings. So I'm sorry, not unlimited amount of trading, unlimited amount of shares. Another ones that I wrote on here is Fidelity and E-Trade. E-Trade is also a really good one. Basically, you sort of have to do some research on this to what fits your personal trading style. Um, if you're trading in the companies in which you can only afford, less than 1,000 shares consistently, you want to trade in the higher, more expensive companies, then maybe somebody like Scottrade is fine for you, or Fidelity, or maybe even USAA, or your banking system. So moving on, if you have any more questions about brokerage accounts, of course, you just email me. Moving on, how to find news. And I've said this before, why it's important. Basically, you can trade off of two things, news or indicators. I personally use indicators because news is basically gossip. And in the consumer world, you really don't know. Some might think it's good, some might think it's bad. It's all in perspective, in which way it's leading. So one day news comes out. For example, a very good example is Rays. One day, very good news, stock's going up. The next day, bad news, and it's crashing. 50% of what it's gained. So news itself, not efficient. But if you have those indicators, very, very, very helpful. You have to use your indicators. That's where you know how to buy and sell. You win every single time. So moving on. Yahoo Finance, very good. Google Finance, very good. Like I said, you can type in the little stocks in there, and now they're delayed. They're delayed about 15-20 minutes. MSN is another one. Morningstar. Morningstar not only gives you news, but in fact, Morningstar actually has like a special team that will email you or message you and actually give you opinions on the stocks. Now, the only bad thing about Morningstar is that their investors are looking at big cap blue chip stocks. Basically, what a blue chip stock is, a very good example is like Walmart, CVS, Lowe's, Home Depot. Those companies, Verizon, those companies aren't moving anywhere. Apple's a very good one. Those companies aren't moving anywhere. They're not going to have very huge volatile gains or losses in a given week or even in a given day. So their investors concentrate more on those stocks. Now, the problem with those stocks is that they're so expensive. Shares of Apple are running about $500 a share right now. Well, as you know, as I showed you through my example here, the more shares you have, the more money you're going to make, basically. So, give you a quick example of that. If I have 1,000 shares at a company of $1, which means my initial investment was $1,000, every penny that stock goes up, so from $1, it goes to $1.01, I make $10 off 1,000 shares. If it goes to $1.02, I make $20. Now, if I were to bought 2,000 shares of this company at $1, which would have meant that my initial investment would have been $2,000, every penny that it would have gone up, I would have made $20. So it goes from $1 to $1.01, $20. From $1.01 to $1.02, $40, and so on and so forth. So shares are going to make and break you. You got to have some shares to make some moves, to make some money, and make some gains. That's why I don't invest in stocks like Walmart and Apple. Those stocks are very common. They come in package deals in which you can invest with mutual funds. And like I said, the mutual fund route, 20%. If 20% a year is you would like 20% steady gains. 20. By the way, that's on a good market. That's a good year in the market. Then maybe that's more your route. But that's obviously not my route. I like to trade myself. I'll decide when to enter, and I'll leave it up to myself. So, that being said, that's going to conclude lesson 1 here. If you guys have any questions, email me, Gulburak, GULBURAK @yahoo.com, or send me a message on Facebook with Strategic Stock Traders. So, all right, you guys have a good one.